today I have to make a confession. I have to be our new logo now is true. So I have to make a confession. I had a conversation with a young man earlier today, and I'm like, after I said it, I'm like, that was pretty brilliant, even for me. So I wrote it down. So I want to be honest with you guys. I'm going to read from a teleprompter for the next like 30 seconds. This is kind of what I said to this guy. And then it's going to kind of just prep you into kind of what we're going to talk about it today. And also, if you're here, we're hoping you're going to understand by the end of this what's going on with those and why. So without further ado, let's get to it. Most people think they're shopping for mortgage rates, but really, they're just being shown one option at a time. That was the thing I thought about. So today I'm going to show you how we can compare your loan with over 30 different lenders using just one application and one credit pool. Our goal here each day is to come in and explain to you guys what the heck's going on with these and the whys behind it. But today we're going to actually pull the curtain behind the scenes and show you how we compare your application, your loan with over 30 different lenders. I told you I'd mess that up because I can't really read a teleprompter, but you get what I was saying. So what we try to do is explain to you guys, just because these rates are showing what they are doesn't mean what you're going to get. And also, when you're giving a rate quote at the time, you're getting a snapshot of what it is at that particular time in the moment. It's like a stock. Somebody asked me and they were like, Dan, how often do mortgage rates change? I'm like, they can change throughout the day. And every day when we come in, I hopefully explain to you guys kind of what's moving them and the whys behind it. So what you're getting is just a little snapshot. It's like you buying a stock. You want to buy a stock right now, but if you wait an hour, that stock price probably isn't going to be the same price. So we want to explain to you guys all this stuff and really how mortgage rates work. So if you're a homeowner, home buyer, maybe a realtor, a loan officer, hopefully today we can help you understand how to get the best one of these and with using one application and just one credit pool so you don't wreck your credit. So thanks, Alan, for putting up with all that behind the scenes there. So what we're going to do today is let's just go down what actually helps you get into a position to get the best rate out there. Okay, so let's get over to here. Here's what I want to see or show you guys. If you're out there looking for the best rate, I mean, this was the website that used to be the end-all, be-all. Remember, Alan, you'd always hear Lending Tree. What's Lending Tree rates look like? I just ran this. I just ran this comparison before we went on, and I'm like, okay, I want to just show people how rates are all over the board and how it's advertising. But look at Lending Tree. You go down through here, and I'm not kidding you. You just put in this info. Now, this is just auto-filled. It looks like they only have one advertiser. So I not even messed around with these things. Let's say I'm not looking to buy a $300,000 home, a $250,000 home, great credit, everything else, update it. Oh, now I'm getting another one. So maybe they're just, I don't know what's going on there. But here's what most people face. They'll go to like bankrate.com, who also isn't a bank, folks. So what they do is they go down through and they give you this. Okay, if you're buying a house in these areas, here's the rate you can get. But most people don't have enough money to buy their first house anyways. And if you're looking to refinance, if you go over to these numbers right through here, you can see right kind of above Alan's head. Look at the cost to get that rate, $7,000. Well, wonder if I don't want to pay that, or wonder if I don't have a 780 credit score, 20% down. How does all this work? That's what gets over to us. So there's many pieces of the puzzle that really makes up your mortgage rate. So what Alan's going to show you, he's going to do a thing that we do behind the scenes. And what I want you guys to do is let us know, and I'll get up some chats here. We do need participation, folks. If you're here with us, give us some of this information. And if you don't, and you're a little bit timid behind the scenes, I'll provide Alan with that information. But let us know what that information is. But the biggest things you have to that you can pay attention to and really affect before you really go out and start searching for mortgages, the two biggest factors is what is your credit and how much money are you putting down. And then another piece of that is your income. Okay, your income is what your income is. Okay, but your credit, that's another big piece of the puzzle. Then how much do you really need to put down? So with your credit, there's all kind of things you can go through. One of the first videos I did, it got like 250,000 views like that. And I'm like, oh, this YouTube stuff's pretty simple. And since then, we just hit, I don't know if this is going to give us an applause or anything. We just hit 40,000 subscribers last night. I'm watching a movie with my wife and I get ding, ding, ding. And I'm like, oh, we hit 40. So thank you guys out there for watching us. But your credit scores are probably one of the biggest pieces of this puzzle. I do have a public service announcement. Alan, what was the call? I ran down the hall yesterday and I'm like, Alan, I got to talk to this guy. Take it from there, because this is where it gets a little bit, but it didn't work. But go ahead and take it.
You're talking about the gentleman that had a bunch of calls after
you pulled the credit, and then he called up. Hold on, I just had a monitor go ahead. Yeah, that guy. And then I ran down the hall. I'm like, dude, I got to talk to him because I heard his credit got pulled 35 times.
Yeah, we ran his credit. I believe it was Tuesday or I don't know, earlier this week. And then within the next couple of days, he said he had 35 calls by 1 o'clock yesterday. So that's borderline harassment.
Yeah. So here's, we don't sell this data, folks. I don't want you to be called by 35 people because it just gets completely confusing and you're going to wreck your credit. So here's a thing that I want you to go to. I don't get paid. Alan and I don't get paid for this or anything. We're not sponsored. We just want to help you guys out. So if you're looking to buy a car or a home, not even buy, just refinance, go to this system here, read through it. You can elect whatever you want down at the bottom. I elected, I think it was like a 5-year term. You can click this thing. What's it do? Goes through here and asks you questions. I didn't make this. The credit agencies did, because they're trying to fight this in Congress. And I don't know why anybody wouldn't want this, because it just gets rid of all this junk. Do you really want your credit and financials? And it also give you, kind of how much you make, all this other stuff. I elected this one electronically. I don't want to do anything by mail because I don't even trust the mail anymore. So that's what I did. Okay, so here's the biggest pieces of the puzzle. So when you're looking at mortgage rates, we'll go back to this thing through here. Mortgage rates, here's what they look like. And this is the website I use each day. We're working on creating our own website, to believe it or not. But that rate over there, who gets that rate? What is that rate? There is 30-year fixed rate. Let me know if you think the 30-year fixed rate, anybody that qualifies gets a 6.2 rate if they're trying to get a 30-year fixed rate. But you don't. Okay, so what that rate over there consists of, that person has a 780 credit score, and they're putting down, I think in this case, 25%. And I think there's even an application fee. If you want to learn it all, just go down through here, because it always legally, you always have to go down through. And this is mortgage rates in Texas. I don't know where that's there, but they have to legally go down through. You can use mortgage calculators and stuff like that, but they have to, tell you what does this consist of, and you can scroll through there, and that's what it consists of. What I'm getting to is right through here. Here's what we call loan level price adjustments. So these are the factors that will affect your rate. Okay, so over on the side, you can see where it says credit score. Well, that's your credit score. And then across the top, you can see your loan to value. Okay, so what your loan to value is, it's your home price divided by the value of your home divided by the amount of money you owe on it. Okay, so let's say you have a $200,000 house and you owe $100,000. That means you're at a 50% loan to value. So you'd be in this bucket right through here. Hopefully you can see my screen. Okay, so let's just look at 2 or 3 people looking to buy a home, and their credit scores are just a little bit different. Okay, but we'll come to an extreme. In one, it's pretty big, different. So let's say this person, the first person, has a 780 credit score, and they're looking to put down, 25%. It's a great customer. Okay, so we scroll across here, and right through here, it says 0. 0 means they're getting the best rate, basically the best rate in the market. There's no adjustments to this thing at all. Well, that same person, if they had a 6, or let's just go in the middle, a 700 credit score, you go over there, that person would have to pay 0.875 in points. Okay, that could be a lot of money. If you're buying a $200,000 home, it's $1,700. Okay, but let's go down, and let's say your credit score is even worse. You're way down to here. You need a 620 credit score to qualify. Well, then you scroll over here. That person has to pay now 2.125 in points. That's a lot. Well, then you start going down through here. What kind of property is it? Well, if it's a condo, we're going to scroll over here. That person has to pay another 0.125 in points. If it's a second home, they have to pay 2 more in points. So you have a bad credit score, you're paying 2 points there, and then you're going to pay another 2 points. It can be really expensive. So now you understand a little bit more why these people right through here, this is fantastic rates, because it's the best possible scenario over here. When you start really adjusting these things, they don't look so good. And especially if you don't want to pay $7,000 to the bank up front, I'd avoid that. So this is what we're trying to explain to you guys, how mortgage rates work and what can you control. Okay, so that's that part of it. And then the list goes on and on and on. There's even loan amounts. If you have a bigger loan, you might get a better rate. So it lists goes on and on and on. So that brings us to the one thing we have created a website. When I did that video back years ago, I created this website. It's called creditscoresandmore.com. Just go there for educational purposes. There's a couple free tools in there. Use them, check them out. Don't pay for any of the major services because you're probably already using something now already. But there is a free tab down there. It is either going to take you to Credit Sesame or Credit Karma. If you don't use it, it's free. It's pretty awesome. And don't click for any of the bells and whistles. So that's what we got. So now, Alan, sorry, I bored the heck out of everybody. You still awake over there?
I'm here.
Okay. So let's get to our first question. So, folks, what we're looking to do is we're looking to show you behind the scenes, how do we compare your loan with over 30 different lenders? So here's what we do. I'm going to bring Alan's screen on the board. We take your application just like every other company. Okay. Then we're going to pull your credit just like any other company. And then we're going to run your loan. Well, we do a little different. We want to get you pre-approved. We don't want to get you pre-qualified, because a pre-approval doesn't really mean jack if you're out there trying to get buy a house. We're going to walk you through all the pieces of the puzzle. Then we're going to run your loan through a system we call, it's going to be Fannie Mae or Freddie Mac. Then we get you completely approved. Okay. Then we're going to take that data. And then we're going to say, okay, well, here's our rate. Alan, what's our rate today? Okay, that's our rate. Then I'm going to say, Alan, what's the best rate out there? So, Alan, you take it from here, my man.
All right. So purchase price, we're doing a purchase, $685. Then the 5% down. So loan to value is 95. Credit score is 720 and 725, so we'll use the 720. Let's see what else we got. Zip code 84096 in Utah. All right, let's see what we got. So this is going to scan our system with all of our lenders, and they're going to punch up their rates. So let's see what we got. Yeah, 6.25 with no cost. If we open this up, this is called what's called the rate stack. And that'll give us a look at all the options and the points associated with it. So 6 1/8, you can get it. It's going to cost you a quarter, which is about $1,600, or 6%. It'll cost you half a point, $3,200. So, I mean, this is really good, especially with a 720 credit score, which is good, but it's not best score.
Well, do me a favor with that one. Well, let's just play around with that one for now, just to show you how, let's check what I was saying before. If he had a higher credit score, would it help his rate?
Yeah.
Because that LLPA calculator spreadsheet we just had, I'll try to make a copy of it for you guys down below. If you're a loan officer or realtor, Google it. It gives you a little understanding of where those buckets are that really affect people, and where some programs you might want to go to an FHA loan, and we'll kind of move over to that here in a minute.
So yeah, if it's the top tier is 780 plus. So let's say the 780 credit score. Let's see what that changes. Should have a pretty good impact with 5% down. Yeah. Well, I mean, you'd be getting money back at a 6% rate. So you'd be getting a credit of about $800 at 6% if the score was 780.
would the previous one come back at 6.25?
Mm-hmm. So a quarter
So
rate.
look at that one. At 6.25, you would get back $4,000 in credits. So yeah, if you scroll down, so what you can use that for is sometimes people just don't have. When you're purchasing a home, somebody made a comment on a video I did, I think yesterday, the day before. He's like, duh, everybody knows part of your payment includes taxes and insurance and, other things. I think when you probably bought your first house, I don't think anybody really understood that. So when you're buying a house, you're going to need money for the down payment, and then you're going to need money for closing costs and these other things. A lot of times people might be a little short. So if there's just no way to come up with money, we can always do this. Instead of getting you a 6% rate, we can say, okay, well, we can help you out. If we give you a 6.25, we can give you 4,000 in credits back. You can use it any which way you want. And that could help a lot of people get into homes.
Yeah. I mean, I would look at it like this, at 6%, you're getting a little bit of a credit. And here's your principal and interest payment right here, $3,902. If you move up a quarter, you get almost $4,000 in credits, but your payment changes by, like $93. It's not that much of a difference. So maybe $4,000 is worth it. That extra little bit of extra payment.
Yeah. And even sometimes in an atmosphere, you're thinking, okay, rates are going to be down a year from now. I can take almost 5,000 in credits. My payment difference is $90. I'm okay. So well, do me a favor. Let's say this person, their credit wasn't so peachy. So now this person has the minimum credit scores that you can have when qualifying for a conventional loan is 620. So let's plug in for kicks, plug in 620. Let's see where this takes us.
Now, do keep in mind, Dan, that Fannie and Freddie, they dropped that. There is no minimum credit score anymore, but we haven't seen anybody get approved with a 620 score. Yeah, it's almost a point higher.
So what is it, 6.8?
6.875.
Yeah. So
that's crazy.
Now let's do this. Here's where the programs come into play. So now let's say, for example, this one, the credit's not good. The first thing I would think for this person would be, okay, you have limited, you're putting down 5%. You only need 3% if you're a first-time home buyer, and if you're going FHA, you'll only need 3.5%. So let's just do this. Let's save you 1.5% because we use that for FHA closing costs. So let's just go 97% or 96.5% loan to value. We're going to put 3.5% down, and then switch this over to an FHA loan, if you would. And this is why, and we're also going to show you, it doesn't always, you don't have to have bad credit to go with an FHA loan. There's a lot of other determinants that can really make or break this. What was happening?
Yeah, this one is the base loan amount's higher than FHA will allow in this situation. But
just swap it out. Sorry about that. I couldn't even see it.
Yeah, so if we had a 620 credit score, purchase 3.5% down, you're looking at like 575 with a credit.
Okay, so here's what happens though. Just so you guys, we're throwing everything on the table. When you get an FHA loan, they charge you a fee. Okay, it's is it 1.5 or 1.75? 1.75. 1.75 is what they charge you. So let's just for kicks, jump in that rate at 11. Just for I don't know if I'm going down a good path or not. Scroll down. What is it to get a point back for the borrower? Let's say a 1.5.
6 1/8.
Okay. You're 6 1/8. You get all the money back to cover that FHA fee, and you're better than what a conventional loan would be. And your PMI, which is a factor if you don't put down 20%, it's probably going to be cheaper this way anyways. And then here's the cool thing. If you have an FHA loan or a USDA loan or a VA loan, it's simple to refinance. Okay, all you have to do, reach out to us. It's called our Streamline program. What we do is we pull. Sometimes we can get away with mortgage only credit reports as long as you haven't missed a payment in the last 12 months and your credit scores are higher than 550, I think it is. You should qualify. No appraisal needed again, and you don't even have to re-verify your income. Okay, that's it. So we're going to say you're paying well now, so we'll help you do all the paperwork and get you in that lower rate. And if your rate's 0.5% lower than where it is today, you're probably in good shape. If you bought in the last 2 years, your rate right now probably, Alan, what were you saying is the average rate savings? Was it 1.3?
1.3%.
And the dollar figure, it was over 5. Was it over 500?
It was like low 500s on average.
That's crazy. So yeah, and the average closing costs when people look at this, and that's what you're going to get pullback from. If you're a consumer, you're probably thinking, okay, I went through this when I bought my home. It was so expensive. I paid 10 grand in like title fees and stuff. When you're refinancing, it's a fraction of the cost. So that's kind of the position there. But let's also talk to if you're looking to this one was a purchase. Let's see. I think we have some other ones. Darit, let's see what you got for us, my man. He's back again. Let's see. Hey again. Can you take that one?
Yeah. So we got what we're doing: conventional, buying 868.
He says he has left 691,000 left.
600. How much, Dan?
691,000.
Okay. Well, credit score, I don't know what it was, 780. Let's just say 780.
Above. Dareen, if you can pop in your credit score, I'd appreciate it.
Zip code 07834, New Jersey. All right, so right now we'll be looking for an ARM, 5-year ARM. Let's see what that looks like. .6% flat. We're not really seeing much difference between an ARM and a 30-year fixed.
So it's crazy.
Yeah, let me see.
What's a 30-year fixed on that?
I would think maybe a little bit better. Yeah, same.
That's wild.
That is wild.
Yeah, we had
one reason to do an ARM.
Yeah,
really.
We had one earlier. Same thing. When I got that quote from you earlier, it was in the 7.5 for both ARM and fixed. So
yeah, I'm only really seeing a major difference if it's a jumbo loan. The ARMs are better
when it gets ARMs. Got it.
Yeah,
that's just weird because you have the Federal Reserve. They keep cutting rates, and that does play a key role in short-term rates. And the other rates are just factored into the bond market. So basically, that's kind of what we do. So if you're a homeowner right now, we do have a tool for you. I'm going to flip over to my screen 1 second to get back to here. Make sure I don't lose you completely, my man. So if you guys are out there and you need some help, if it comes down to a mortgage, we'd love to help you. Okay, we've been doing this. I've been doing this for over 35 years. Alan, he's been in this pit with me for a long time as well. Yeah. So we created the website over here. We created this thing, and we kind of handpicked a lot of these items. But one of the biggest things we have over there it's called RateWatch 2.0. I'm trying to keep as close to my mic as I can, folks. I know it's hard to hear me. I don't know why, but it's for homeowners out there. All we need to do is plug in your mortgage information. Okay, so here's what we want. What rate do you want to kick the tires? So you don't have to work on this on your own, because we just showed you where do you start? Who do you start? Do you Google it? Do you go to Lending Tree, see their one option? Do you go to these other ones and just get completely confused? You can, just to figure it out. Make sure you go to opt out pre-screener. You do that, and we air it out, but you do that before you do anything. That's the one piece of advice that I'd love to give you. So I hope you got a kick out of when I said at the beginning of this, but I just thought that was pretty cool. So again, what you need to understand is when you're out there and you're trying to watch for these things over here and what they're going to do. Let me bring you up to where rates are today and what's going on behind the scenes there. Rates are up a little bit today. And again, when you start seeing these things, and even when I come in and talk about rates each day, you have to understand the fundamentals about these things. Okay, what makes up that rate over there? What can you do to help improve it? Just by going out there and trying to get more and more rate quotes. It's just giving you other options available to you at that time. But you can't compare apples to apples in a market where every day things change. So what you have to understand, it's like the stock market. You get into the stock market and you buy that stock, and you watch it run, and every day that stock price moves throughout the day. Same thing happens with mortgage rates. So if you'd like to check out if we can help you out, if you're looking to refinance, I'd love to help you there. Where we really specialize is helping people get basically from renting. They want that. They have that idea of, I'd love to get into a house. What I'd like to encourage you to do, though, don't disqualify yourself. It's a new year, a new beginning. Check your credit scores. Go to creditscoresandmore.com or whatever other systems you want to use, and just figure out what's best for you. And we'd love to be a part of that if you want to start looking at home ownership in 2026. Need help with a realtor? We can help you there. You need some assistance helping your boost your credit a little bit? We got the tools to help you there too. And then when it comes down to mortgage products, well, hopefully we just showed you we got over 30 different lenders in our arsenal. So when you're reaching out to us and you're putting in your mortgage information, it only takes one application, one credit pool, and we're going to help you out if you're looking to buy or refinance. So, Alan, I don't think we have any more questions for today. So we'll pick this back up next week at the same time and same place to make sure you guys come in when you're asking questions to figure out what's going on with these. Hopefully we're giving you at least the information to figure out why they're changing and what you should do about it. So thanks for watching, folks, today. God bless. Have a fantastic afternoon, and we'll see you next week. Same time, same place.